Good morning, good afternoon, good evening to you all joining us from various parts of the world. We're delighted to have you join us at our Blended Finance Options for Funding Resilient Infrastructure webinar. I am Latoya Richards Franklin, General Manager of the Caribbean Alternative Investment Association, and I will be your moderator for this segment. Now, our chat is open, so please let us know where you're joining us from. We'd love to hear from you. The next 90 minutes will be worth a stay, I promise. We have a compact program lined up for you, and this includes a brief precursor on getting the region ready for blended finance. We'll have our keynote presentation on blended finance for sustainable development. A panel discussion will follow on how blended finance instruments can be used, what has been the experience, and the role in supporting climate projects and SMEs, etc. Note that we encourage your questions at the designated points, and our first set of questions will be accepted after the panel discussion. The final segment will allow for us to have a discussion on investment opportunities in infrastructure that we are currently packaging, or that the Development Bank of Jamaica is currently packaging. We will certainly leave this session with an expanded knowledge and increased readiness to capitalize on the gains of blended finance. Just some housekeeping matters. Please take every opportunity to ask questions when the time comes. Questions should be posted in your question and answer section. You may feel welcome to raise your comments in the chat. Please also note that we'll be posting resources in the chat section for ease of access. And lastly, a recording of this webinar will be made available to you. Now, next on the agenda are remarks from two exceptional leaders in development financing and alternative investment ecosystem building. The Managing Director of the Development Bank of Jamaica, Mr. Anthony Shaw, and he'll be followed by the Chairman of the Caribbean Alternative Investment Association and the CEO of the Cygnus Group, Mr. Beresford Gray. They will each give their remarks in that order. Welcome, Mr. Shaw. Welcome, Mr. Gray.
Thank you very much, Latoya. Good morning, ladies and gentlemen. Allow me first to welcome Beresford Gray, Chairman of CARIA, and Matthew Pegon, Head of Blended Finance, IDB Invest, and other distinguished panelists and presenters, and also to the DBJ staff. I see quite a few of them on. Thank you all, and thank you all participants and guests for joining us to discuss this very important financial topic of blended finance options for funding resilient infrastructure projects. The DBJ is well known for its ability to, as they say, think outside the box and to bring new approaches to the business of development, and the bank's private capital technical unit and the public-private partnership and privatization division, which we call P4, and are again co-hosting an event to assist entrepreneurs and financiers in finding solutions for the perennial financing challenges. The two divisions are jointly hosting this webinar in collaboration with CARIA under the theme Blended Finance Options for Funding Resilient Infrastructure. This event provides an opportunity for CARIA members and all other stakeholders to have meaningful dialogue and key experts in finance on utilizing the blended finance modality to de-risk resilience projects and to crowd in private capital funding from within the region, as well as from global sources through the establishment of an innovative funding vehicles. Note that the DBJ is a central implementing agency for the government's public-private partnership and privatization program, which P4, which allows us to facilitate the mobilization of private capital to finance and implement important infrastructure development in Jamaica. The P4 program has targeted several of the country's most strategic public infrastructure The P4 program has targeted several of the country's most strategic public infrastructure for development and modernization to meet our Vision 2030 developmental goals. These include the upgrade of highways, seaports, airports, and water infrastructure, while other projects are being contemplated to upgrade sewage plants, solid waste management, judicial, and other infrastructure. As the government looks to partnerships with local, regional, and international private capital sources to fund many of these infrastructure projects, it is critical that new financing models are pursued in order to attract the necessary capital. We expect that we will learn more about these models today and how we can utilize them to our lasting benefit. To this end, I'm sure this webinar will be of great value to all of us. I wish you all an interesting and productive experience. Thank you. And I also wish to thank Audrey Richards of DBJ for convening this session and putting it all together. Thank you all. Back over to you, Toyo.
Thank you so much, Mr. Shaw. I now ask Mr. Beres Gray to his opening remarks.
Thank you, Latoya, and good morning again, everyone. And I understand that we have participants from of course, Jamaica, the Caribbean, and other countries across the globe. So this is very exciting day for Carrier, the Development Bank, and of course for all the participants. I really want to express on behalf of Carrier our sincere gratitude to all the participants to take the time out to participate in this, I would say, very important discourse on blended finance options for funding resilience infrastructure. And of course, I believe this is one of the first such webinar in the Jamaica or by extension, the Caribbean for that matter. I myself is just becoming familiar with the notion of blended finance, which of course our esteemed speakers will take us through and educate us. In that regard, I would really like to thank our keynote speaker, Matthew Pagan from the IDB Invest, and all our other speakers and presenters from the International Finance Corporation, IFC, who have been a long-standing partner for Jamaica and the Caribbean in infrastructure development, as well as IDB, of course, Resilience Capital Ventures, the Ministry of Economic Growth and Job Creation, and need no explanation why the ministry would want to participate in such a webinar with us, as job creation, economic growth are at the forefront of the government strategy, of course. The Port Authority of Jamaica, and of course, the Development Bank of Jamaica, who have been a champion through, as Michael said, through P3, P4 projects, working with private sector investors, international multilaterals, as well as other private capital, sources of private capital. Carrier involvement in this seminar, of course, is driven a lot by our vision to work with our stakeholders across the region to create a globally attractive and recognized alternative investment ecosystem. One that can attract capital not only from local and regional investors, but from international investors. We as a region need to be attracting capital in the alternative investment space, whether it's private equity, infrastructure, real estate, private credit, venture capital from the international market. And to do that, we need an ecosystem that facilitate our members to engage with international partners we need to have the capacity that illustrate best practice amongst our fund managers, from governance to human resource to reporting, capital allocation. All of these are relevant in order for us to grow the ecosystem. And bringing discourse and dialogue to matters such as blended finance, of course, is an important step in the CARIA mission. Working with DBJ and other partners, we intend to continue our mission to introduce new strategy, new financing options. Of course, today we are going to be speaking about blended finance, other important financing strategy that our members and the wider society expect CARIA to champion is discussion and discourse and impact investing. All of these efforts are to drive velocity in the development of the private capital market. Undoubtedly, for countries like Jamaica and the wider Caribbean, the capacity to deepen our private capital market to enable the development of infrastructure, to address some of the painstaking challenges and deficiency in our economy. We have to look at ways how we can leverage multilaterals, leverage private sector capital combined with, let's say, friendly multilateral capital to create blended financing that will, of course, as Anthony indicated, crowd in more and more capital, either locally or internationally, to move the needle in these areas. And today, this course, I think, set the stage and will no doubt educate our participants, educate our members and the wider Caribbean in actions, concrete experiences that will be shared with us, through which blended capital can be used to deepen linkages and create more opportunities within the region for investors, infrastructure projects, and the society as a whole. So once again, I want to thanks to everyone for participating, and I want to encourage you to actively participate, ask questions, and I am very confident that this discourse will be very fruitful to everyone. Thank you, and enjoy the rest of the day.
Awesome. Thank you so much, Mr. Gray. And of course, everyone, we have no doubt in our minds that we have the right kind of leadership at this time. Now we are moving on to another segment of our webinar. This has to do with a precursor presentation on moving the needle that will be delivered by Audrey Richards. Audrey Richards is a consultant with the DBJ, where she leads the bank's program for the development of the ecosystem for private equity and venture capital in Jamaica. She serves as a director on the board of CARIA, among other boards. And needless to say, she is one of the chief instigators of today's event. Very much invested and supportive of everything that we're doing today. So let us welcome Audrey as she presents.
Hello, good morning, everyone. Ladies and gentlemen, good day, wherever you are. It's my pleasure this morning to share a few thoughts with you at this event. I'm not sure if I'm an instigator, but certainly I'm a collaborator. And as many of you may know, the Development Bank has a mandate to be able to support the private sector when it comes to access to finance when there is a market failure. Now, in recent years, we have gone beyond filling the gaps with the traditional loans and grants. And we have been, as you would have heard just now, we have been a catalyst for the development of the alternative investment markets in Jamaica. And we dare say we have also influenced what's happening in the rest of the Caribbean. Now, as Barris would have indicated, our private equity or private credit markets we have seen a significant growth in those markets. And coming up soon, we are also going to be an investor in a venture capital fund, which we hope is going to be able to make a huge difference when it comes to the tech space, particularly in Jamaica and in the region. So our being an anchor investor has meant that we have put in, I would say, less than 40 million, and our investment funds, the 9 funds in which we have invested, have together mobilized more than $500 million US. And they have been investing in Jamaica and across the region. So what this means is that we have had funds that have been making an impact when it comes to energy, when it comes to energy infrastructure, when it comes to water, when it comes to our major sectors such as tourism that these funds have been investing in. Now, as we continue to look at where market failures exist, we recognize that there is a need for significant resources. I dare say our multilateral development partners have put together some figures which look like billions that are needed in the Caribbean to be able to move the needle when it comes to development and in particular infrastructure projects which are going to meet the SDGs. Now, across the world, we know that this is a major push, and major funding has been made available from public sources, private capital sources, as well as developmental institutions, all looking for impact investments. In the Caribbean, we have depended on direct investments from our international partners, international pools of capital over decades. And these have been the main sources of direct investment in our really large infrastructure projects. A lot of this capital has depended on government guarantees to de-risk and to attract in that capital. Now, I think we all know that with fiscal responsibility measures, this is no longer the route, and that private capital in the region has to step up. The over 500 million in funding, which has been mobilized over the last few years in private equity and private credit, is really just a drop in the bucket for the millions that are needed to move the needle for sustainable development in the Caribbean. So we see the blended finance tool, which has been used successfully in other regions, as one where we can use concessional funding to help to create the partnerships with private capital, de-risk these investments, and crowd in capital into the region. So as we welcome international investors who are interested, I'm sure would be interested in undertaking some of our direct investment in infrastructure projects, we also believe that our local and our regional capital market players should be at the table and, where possible, begin to lead these transactions in collaboration with local, regional, and international partners, particularly our international development partners. We're familiar with taking the lead when it comes to syndicating loans, regular loans for businesses. And I believe that for these infrastructure projects, our capital market players can do the same in mobilizing the kinds of resources that will move the needle and create the well-needed development opportunities, which I dare say has eluded many of us in the Caribbean for too long. The fact of the matter also is that we need major investments in the Caribbean to put us on the path of growth. With climate change and other global imperatives, we really cannot afford to wait. The time is now. So we hope that this event will help to sensitize our market players and funding sources and understand what is possible. We're pleased that IDB Invest and IFC, represented by, interestingly, 2 Matthews, as well as our experts, such as Dr. Marcel, are here to share their expertise with us and to create a better understanding of what's possible based on their experiences in other regions. Now, I'm sure they will also indicate that we blended finance options are not just for funding infrastructure, but some of our innovative early stage businesses can also benefit from that. And with the work that has been done in the ecosystem to develop these innovators and entrepreneurship is alive and well, we see this as a mechanism that can impact all different stages of development. So, ladies and gentlemen, thank you for joining us this morning. And I look forward, I hope this is of value, and we look forward to our future and what can be done in this area. Thank you very much.
Thank you very much, Mrs. Richards. We heard quite clearly her passion, her call for capital market players to help to mobilize resources to areas where major investments are needed, and she highlighted climate change and innovative early stage businesses. We have to look into these areas. Thank you again, Audrey. Now we're moving to our keynote presentation. We are already aware a little about what the finance is, but we have to call on the experts, those who have been doing work in this area, to help us to really understand it. And so we did dig very deeply to find those kinds of persons who would help us to expand our knowledge base on this topic. Our keynote presenter, Matthew Pagon, will deliver his main presentation on the topic. Indeed, we appreciate Matthew's willingness to share with us today. He is the head of blended finance at IDB Invest, and he has been there since 2017. In his role, he oversees the deployment of IDB Invest's concessional finance resources in high impact projects. His team has channeled over $500 million of concessional capital into 80 projects, unlocking more than $5.5 billion in investments aligned with the Sustainable Development Goals and the Paris Agreement. He has published several knowledge pieces on blended finance. And I must emphasize, Mr. Matthew will give his keynote presentation, and he will immediately go into the panel discussion, which will involve Dr. Gillian Marcel of Resilience Capital Venture and Matthew McClymont of the International Finance Corporation. Welcome, Matthew. Welcome, panelists.
Thanks, Latoya, for the introduction. Thank you to the Development Bank of Jamaica and Karaya for organizing this event. And, many thanks for Mr. Shaw, Mr. Gray, and Mrs. Richards for the introduction and sort of setting the scene. My name is Mathieu Pagon. I head blended finance at IDB Invest. IDB Invest is the private sector arm of the Inter-American Development Bank, which is a multilateral development bank that provides financing to Latin America and the Caribbean. We work with 9 small and island countries in the Caribbean basin. Last year, we extended more than 300 million of financing to those countries in 19 different investments, and that represents approximately 10% of our financing at the level of IDB Invest. Before I start with the presentation, we have approximately 15 minutes. The idea is to give you a little snapshot of what's the latest in blended finance. I'm going to oversimplify a number of concepts. And I just want you to keep in mind that the reality of blended finance right now is that this is a discipline that is still in the making. What I thought 5 years ago about blended finance has changed nowadays. And so really, we will be showing you the view of the development finance institution and to some extent the view of IDB Invest, but keep in mind that there are different views in the market as we speak, and that the discipline is still in the process of shaping itself. With that, I will kindly ask to put the presentation on screen. Thank you very much, and move to the first slide. So what is blended finance? Development finance institution define blended finance as the use of concessional finance in private sector operation, always with an objective of promoting sustainable development in developing countries. There's two important dimensions to keep in mind when we talk about blended finance. The first one is the instrument in which we're extending blended finance, and the second one is the type of concessionality we're using in extending those instruments. On the side of the instrument, this is really any type of financial instrument can be used for blended finance. So you have your traditional debt investment, but equity works as well, grant works as well, and risk mitigation instruments such as guarantees can equally be used. You will read that in some instances, there is a push for one instrument against the other. Our experience as blended finance practitioners is that the choice of instrument is to a large extent context specific and is really a nature of what we're trying to support. So we haven't found any evidence that one instrument works better than the other on the overarching level, but rather that we need to adapt the choice of instrument to the particular investment we're trying to support. We see three dimensions in when we talk about concessionality, and really concessionality is a fancy word for subsidy, and really sort of keep that in mind as we go through the presentation. Blended finance is about subsidizing. And there's three different types of subsidies that we can think of. The first one, which is the most obvious, is a pricing subsidy. So I'm extending a loan, and instead of pricing that loan 5%, which is what the market would price that transaction, I'm giving a loan at 2%. And I have a subsidy of 3%. That's sort of the most basic way of extending blended finance. Another way of extending blended finance is to provide terms and conditions that are not available on the market. And that can be typically things like higher risk investments and just the fact of financing that higher risk investment, or also providing longer tenor or structural features such as deferred amortization features. Sky is the limit in terms of what you can do in terms of adjusting those terms and conditions. And here again, it's sort of a matter of adapting to the market failure we're trying to solve. Last but not least, liquidity. Things like providing a backstop investment that will guarantee the emission of a bond. And once the bonds get emitted, and if there's enough private capital that is willing to buy that bond, then you no longer need the backstop blended finance tranche that was available in case private capital would not be available. Next slide, please. Thank you very much. So as I said, blended finance is a subsidy, and when donors extend blended finance to development finance institutions, they really ask us to operate in the field of temporary subsidy. So that means that we're not supposed to use blended finance for anything that relates to permanent subsidy or longer term subsidy. And that typically constrains us in what we're able to do with blended finance. And really, it implies that whenever we use blended finance and whenever we use those temporary subsidy, there is an implicit assumption that that subsidy, that concessionality, has to result in a change of the market so that subsequently it's no longer needed. And so one of the most important tests for us as blended finance practitioners when we decide whether or not to extend concessional finance is whether there is a good case that our intervention is going to result in a change of the market that will in turn result in that subsidy being no longer needed. And so typically when you look also at the more towards sort of public goods, you have the traditional DFI capitals. So this is when IDB Invest or IFC operates with their own commercial capital and they're required to extend it on a commercial basis. And obviously at the very end of the spectrum, you have traditional private capital that can operate in more established markets. Next slide, please. So I think Audrey already sort of touched upon that slide and really the importance of understanding that blended finance operates within a continuum, and that continuum also relies on other sorts of public intervention that can stir a conducive environment, or that can lead to change in regulation, or that can result in project preparation study that in turn can provide for financing opportunities to arise, and then blended finance to arise. And so it's always important to understand that, generally speaking, blended finance doesn't operate in the vacuum, and blended finance alone is not the silver bullet to solve the challenges of the Sustainable Development Goal. And so if you look at the top of the chart, typically like venture capital project that don't necessarily rely a tendering from the government, things like project preparation, or building pipeline, or creating hubs for venture capital companies, to operate. Those are often prerequisites, to move into a phase where we can look at an investment and where blended finance can kick in. Similarly, when you think about energy and infrastructure investment, those tend to relate a lot to intervention in the early stage from the government in sort of preparing an enabling environment, making sure that there's adequate regulation in place, and also putting in place concessions, tendering them, and sort of all of that is upstream work. And I think DBG talked a little bit about that, and we will be hearing from them as well in terms of what they're doing on PPP stages. So again, main message of that slide is there are other things that need to happen before we can look at blended finance, and that is typically outside of the realm of blended finance. There's three main rationales for us to use blended finance, and this is based a little bit on our experience and the 80+ projects we've supported. The first one is really piloting new concept, or piloting new business models, or piloting new technologies. Typically, when we enter into those transactions, we tend to see low level of private capital mobilization, and this is all right. And let me emphasize that this is all right. So we're not necessarily always looking to have or to maximize private capital mobilization. We do recognize that when we operate in those early stage pilots, what we're really after is a demonstration effect, and not necessarily crowding in private capital at this stage. That might occur subsequently. And those are typically one-off investments, and those are typically investments where our blended finance intervention combines a reduction in pricing and also more risk-taking from the side of blended finance. Then the second category of project that we see is really sort of the replication, and we do a lot of that in the energy and infrastructure space, especially when we support government in implementing new tenders. So new tenders in renewable energy, or new tender in a given piece of infrastructure. And really here, the idea is to start crowding in some private capital mobilization, also demonstrate the viability of the concessions that have been put in place by the government. And typically we would be looking to support 2 to 4 investments. Our experience shows that if you only support 1 or 2 investments, you don't get enough, you don't get to the scale where it creates a tipping point that can be subsequently copied by the market. And here again, we do have a combination of de-risking and pricing, but this is where we start to operate more in terms of de-risking and adapting the terms and conditions of our financing, and less so in terms of a subsidy in pricing. And finally, the last bit is really about scaling, and this is really about operations where we think they're already commercially viable, and the main purpose of using blended finance is to increase the level of creditworthiness of the transaction so that it can gather to institutional investors or to private capital. Typically in those transactions, it's really important to underline that we don't extend concessionality in pricing, rather we extend concessionality in terms of de-risking. But the underlying view is that the underlying investments are sound, and therefore there is no need to subsidize investors. Next slide, please. Thank you very much. This is a quick snapshot of where blended finance comes from. Typically, blended finance comes from donor countries that can either work directly with development finance institution or directly with end beneficiary, or that contribute to multilateral funds that you must have heard of, such as the Green Climate Fund or the Clean Technology Fund. You also have foundations that are becoming more and more active in the blended finance space, and people like Rockefeller or the Gates Foundation, those are names that are becoming more and more active in the space of blended finance. Those are the funders, and they typically rely on specialized financial institutions to extend and to structure the blended finance tranche in an investment. The main brokers of blended finance are development finance institutions. It's worth noting that this is not only multilateral development banks, but we also do see more and more national development banks playing the role of brokering blended finance. And this is obviously a good thing because they do have the understanding and the knowledge of local market. We also see in some instances private financial institutions playing the role of the broker. We tend to be within IDB Invest a little bit more cautious about that. We don't necessarily like to see private agent also be the one deciding on a level of subsidy, because we do see that there is a potential conflict of interest. But just to let you know that this is happened. Finally, the beneficiaries. For us, the main beneficiary, and this is really how DFIs work with blended finance, the direct beneficiary are companies. So we work with companies. Now, there is always the intention that in the back, individual or households will be the ultimate beneficiaries of the investment and of the jobs that are being created. But really, the recipient, the counterpart, and who ultimately gets the most benefit of the concessionality are private companies. Next slide, please. So I'm not going to spend too much time on that one, but we'll make sure that this is available to the audience. What are the conditions and what is the thinking process with the blended finance practitioners to extend those concessional finance resources? The first step is really whether or not the investment we're supporting is creating value to society, and making sure that that value to society is not reflected in what the investor is getting in terms of return for that investment. And in economics term, this is a positive externality. The other thing that we look at is whether that investment or that impact that results from that investment may be achieved without the provision of blended finance. And that's really the idea of additionality. And so you can have a very high impact project, but that can be already financed by private capital, and in which case we will not deem blended finance to be additional, and we will not be extending blended finance. The other thing that we look at, and that's another important concept, is really what's the opportunity cost. So how much concessionality do we need to extend to make the investment work? So how much does it cost to the taxpayer, and how much impact are we getting for that cost? So this is really the idea of value for the buck, and this is something that we tend to measure from one investment to another, and sort of make sure we're using scarce development finance resources in the most efficient way. Last but not least, we look at the notion of what happens after, and can we establish a link between providing concessionality, solving market failures, and then solving the market failure resulting in subsequent investment happening without the provision of blended finance. And that's really sort of part of our assessment. And once we've established all those different criteria, this is typically when we would extend blended finance. Next slide, please. And I think this is the last one. So almost right on time. This is just to show you two snapshots of different blended finance investments we conducted in the region. The first one was supporting a SME growth fund. So here we're working directly with an investment manager and directly with a financial intermediary that will in turn work with investee companies, SME investing companies in the region. And here where we use blended finance was to put in place a concessional loan facility facility that would be available for investee company to fund climate resilience, climate mitigation, and post-disaster recovery, always with the idea that we would protect the overall investment of the fund. The second example is in Jamaica. It's a company named Soleco. Here we're working directly with a company and not through a fund. And the whole idea here, it's more geared toward piloting a new business model and making sure that the business model can work and playing the role of demonstration effect to the market. And so one of the features of concessionality in that case was a principal deferral features and also some reduction of interest rate for the company to reach some gender milestones. So you can see from here that there's very different ways of extending concessionality. And really, the starting point in accessing blended finance, is giving us a call either to Matthew or myself and tell us about your project, and we'll let you know if this is a good candidate for blended finance. With that, I thank you very much for your attention, and we're going to be moving to the fun part of the session, which is the panel. Thank you very much. So next, we're going to have a panel with two esteemed practitioners in the region. So Dr. Gillian Marcel, who's the CEO and founder from Resilient Capital Venture, and Matthew McClymont, who's an investment officer at the International Finance Corporation, and I used to work at the IDB, and that's why it's such a good practitioners. So I'm going to be starting with you, Gillian, and the idea is, make this lively dialogue as possible. So I will ask you to keep your response, around 2.5 minutes, but, I will give you some time to exceed that time limit. But if it gets too long, I will let you know so that we can sort of cover the different topics. I will also ask you, for the benefit of the audience, to the extent possible, when you use examples, use examples from the regions, because that's what is going to appeal most to the audience. And as well, when we talk about the challenges of blended finance, to the extent possible, try to focus on the particular challenges of blended finance within the context of the region. So with that, Gillian, delighted to have you. Let's start with you. So can you tell us a little bit about your experience with blended finance, and specifically how it can be a key instrument to de-risk climate project or support SME development?
Thank you so much, and I hope you are hearing me well.
We do.
It's such a delight to be on this panel with the two Matthews. And first, let me thank Mr. Shaw, Mr. Gray, Ms. Richards, and Latoya Franklin for all of the hard work that you've done in putting this together. Matthew, I'll get to my experience with blended finance in a minute. But let me first start by actually giving some numbers, because I think it's important to provide a context. And as someone originally from the Caribbean, I also want to say that I always start with the why. And the why of looking at blended finance options is because insufficient capital is being mobilized. And so across the world, only 1% of climate finance needs are being provided by commercial sources. So don't take my word for it, because Convergence, which is one of the most esteemed global practitioners and thought leaders in Convergence, in their 2022 document, which we can share, reflects on the fact that blended finance volumes actually fell. Now that is particularly difficult in a region that is starved of financial capital. Again, let me not take my word for it. The Caribbean Development Bank at the recent CREF said that the estimate of climate finance needs in the region is $1.25 billion a year. And of that, last year, 2022, $50 million was deployed. Size, volume are important factors. The largest financial institution in the Caribbean is around $15 billion in AUM. The largest financial institution in the world is about $8 or $9 trillion, give or take. So why we are concerned about blended finance is not particularly because of where it fits in the spectrum of different ways of mobilizing capital, because it's one of many different options. But for the Caribbean region, the issue is how can blended finance actually solve the existing problems? And the existing problems are that this is a region where the mobilization of capital is not yet working at the scale that it should. So that's my why. And I'll get into, in subsequent questions, the way that I approach this and also what we propose as solutions to that mobilization and deployment challenge. Thank you so much.
Great, thank you. And yeah, first, I also want to say thank you to the Development Bank of Jamaica and CARIA for hosting the discussion and also including me. It's a pleasure to be here, and it's a pleasure to be on the panel with Matteo and Dr. Marcel. So thank you again. For those who don't know, I'm not sure if the bios went out, but I'm an investment officer in the Blended Finance Department of the IFC. I've been there for 7 years, working purely on blended finance. With various products ranging from debt to equity to fund equity guarantees, anything to help push forward projects that, as Matthew pointed out, on that scale of bankability, helping to push projects that are somewhat advanced and have rate components in place, but then pushing them over the edge to become bankable. And for those of you who aren't familiar, IFC is the private sector lending arm of the World Bank Group. Over the past decade in IFC, we've deployed about $3 billion of blended finance, catalyzing around 12 billion from IFC's own account, and then an additional 10 billion from other third-party capital. The way that we are, I guess our goal when we think about blended finance is to help catalyze as much investment as possible. It's not just focused on using the funds to push IFC money into projects, but really we want to help mobilize. To Dr. Marcel's points, the gap is massive, and the amount of mobilization that's required is incredible. And so our goal is really to try to crowd in as many investors as we can and try to help tackle some of the world's biggest challenges, including climate change, access to finance, access to clean and reliable energy, and gender equality, amongst other development themes. And all the while trying to adhere to the DFI blended finance principles that I believe were shared more broadly with the group before the panel. As Matthew kind of pointed out, our approach as well is we look to customize our blended finance solutions to the specific context of the countries and the projects that we're trying to help push forward. And as he pointed out, the two main levers that we use are typically pricing concessionality to improve the affordability. That's particularly important when you're looking at new technologies that have higher premium costs until they achieve some level of scale. And then also de-risking to help crowd in others. And I think the de-risking is the main focus of the discussion here. I think we see that when we bring in the blended finance into a more subordinated position or through guarantees in order to help de-risk, it really does have a powerful mobilization effect. And so we spend a lot of our efforts trying to work on with these type of structures to help figure out what each project specifically needs in the market context to help push these projects forward.
Thank you, Matthew. And sorry I was on mute before, but I was also thanking Jillian, and I think it was useful that you provided us some figures by way of background. I would say though, sometime I wonder if we really fully measure private capital mobilization. We only measure private capital mobilization in the transactions that we directly support. And sometimes I feel what we're lagging in the community is a measure of what is happening next. And are we really reaching size subsequently, or aren't we? But back to the topic of the panel, and I think you gave us a good introduction, and perhaps what would be useful now if the two of you could provide us some specific examples of blended finance transactions that you feel are relevant for this discussion. And this time around, I will start with you, Matthew.
Great, thank you. Yeah, I think that there's two general structures that kind of come to mind. The first that's specific to the Caribbean region, we had two large-scale wind projects, one in Jamaica, one in the Dominican Republic. And we used support from one of our partners, the Canadian government, through which we can invest in climate forward projects. In that case, as mentioned, the wind projects, the entire sector was new in these two countries. And so and at least one of them, the type of financing, limited recourse financing, meaning not requiring the corporate balance sheet of a big entity to finance the project, was also had not been done before. And also in one of the countries, there were concerns about the timing of the payments that would be coming from the national utility. They had historically paid everything, but sometimes it took a little longer. When you bundled together the nascent stage of these sectors, then the perceived risks were high and it limited the investor appetite. So in both projects, we look to structure our blended finance in a subordinated tranche. So we provided a subordinated loan in both cases. And then with that, we were able to reduce the risk for senior investors and thereby crowding in different DFIs into the senior tranche, which helped provide the full package of financing, the full amount that was actually needed. In the case of the Jamaica project, we're pleased to say that if we think back again to the spectrum that Matteo showed, the project started out at kind of an early nascent stage. We provided the blended finance, and since then, all of the loans from the initial project have been repaid and it had been refinanced with purely commercial money. So therefore, we showed how the subsidy was temporary. We came in when it was needed. We provided the de-risking that was needed. And then when it could stand on its own and attract purely commercial investment, then we were able to be taken out and then redeploy our funds into other projects that could use that. The second example, general type of structure I'd like to mention is through funds. So where we work with private sector fund managers that are dedicated to specific development themes that we want to achieve, and working with them to develop risk-tiered fund structures in which we can use our blended finance concessional funding to go into a lower tranche. And what that does is then de-risk the more senior tranches that again increases the mobilization that can come into a project. We find that these funds are particularly helpful when trying to aggregate a large number of smaller transactions that otherwise the transaction costs would just be too high for an institution like IFC to try to finance, and fund managers are just better suited in order to help originate and find those transactions and have an expertise that they can look into detail at these aggregated levels.
Matthew, I'm going to interrupt you there. Sorry, just for the
Sure.
purpose of timing. And
Sure.
thanks
Sorry.
a lot. Those are really interesting examples. But I think we would also like to hear from Jillian, about her experience and what kind of examples can you give us of successful blended finance structures. Over to you, Jillian.
Thank you. So again, Matthew, I'm going to answer in a slightly different way, because I think between the two Matthews and Ms. Richards, Audrey Richards, you've given good examples of the type of structures that would work and the types of examples. But that's not the real nub of the challenge. The real nub of the challenge, and I'm going to use a four-letter word, SELL. The nub of the challenge in mobilizing capital in the Caribbean is that the financial ecosystem and financial institutions are not yet at the table understanding that any structure, no matter how well designed, has to be sold. And quite frankly, because the traditional partners, I think it was Ms. Richards who said it, or you might have said it as well, because the traditional partners of Caribbean investors and proposals of projects are development finance institutions and development partners, that selling is not there. Because once you have the structure and once you have decided on roles, you still have to bring together the counterparties and agree on pricing. And we see things differently, where I would argue that blended finance should not start off by saying that what you are offering into the market is a subsidy, which then has to be time delimited. At Resilience Capital Ventures, we believe that a 21st century version of blended finance speaks about the combination of financial capital and non-financial capital, so that you strengthen the financial ecosystem to go out and take its role in all of those different parts of the financial value chain, and to do that very important part, which is the selling and the marketing of these financial instruments. I'll leave it there until the next round of questions.
Thanks, Gillian, and thanks for being spot on in terms of time. You know, I think it's great, Matthew, that you also tell us the story of what happens next, and this idea of the project being refinanced by private capital, I think, is a good measure of success of the blended finance intervention. And Gillian, I think, you know, your point on, you know, it's not enough to come up with a good design, but, you know, sort of need to sell it to the private capital is also spot on. Now, moving on to the next question, what do you think are the particular sectors or business models or technologies where you think blended finance has a role to play? And again, you know, to the extent that you can focus on the particular challenges of the Caribbean. So this time we'll start with you, Gillian.
Excellent, thank you so much. Well, I think that the Caribbean Development Bank and other actors have said it best. We have a region that is heavily dependent on heavy fuel oils for its energy sector. And as I mentioned before, $1.25 billion per year to do that energy transition. So certainly in the Eastern Caribbean, including Jamaica, the energy transition is of paramount importance. But as we will hear from colleagues from the Development Bank of Jamaica, and I'm particularly interested in hearing those presentations, infrastructure for islands. I have a friend who is absolutely convinced that any development investment strategy for Caribbean islands must focus on infrastructure. That is also true, by the way, of large landlocked countries on the continent of Africa. But you've asked me to speak about the Caribbean. So I would say the top three would be energy transition, infrastructure, and of course, climate resilience. These are countries that, as Mia Mottley has said, Prime Minister Mottley has said, that are on the front line of the poly crisis. A sea level rise means, for example, in Nassau, that 70% of the population is at risk. So what we need to be investing in, and then there's food security, is not really very difficult to come up with. It is the strategies for moving these conversations up to a higher level of strategic importance, and then, at the risk of repeating myself, building the capabilities in the financial ecosystems to be at the table to do this work.
Thanks, Gillian. Matthew?
Yeah, I think Dr. Marcel said it very well. And I think that the sectors that she highlighted are also the sectors that we also find are primed and ready. I think if we dig into that a little bit, if I'm a little bit more, maybe I can contribute with a little more granularity. But I think when we think about energy transition, I think there's technologies and business models that I think, we're actively looking at. I'm sure IDB and I'm sure many others are also looking at, particularly in battery storage, the combination of battery and solar, green hydrogen. Obviously that's kind of a buzzword around the whole world right now, but solving that would really help, particularly with island nations. Distributed generation solutions that use solar hybrid and also solar hybrid mini grids. These are all technologies that we're seeing right now. That's proven technology in other markets, that's working with sponsors who have experience in other markets or in the local markets, but they're looking to expand to pilot, as Matthew kind of put it earlier, to pilot and then replicate and then scale. And that could mean across countries or within a country, but to bigger size and building out the markets to a deeper level.
Thanks, Matthew. Gillian, spot on the fuel and energy transition. I think when we think of energy transition in the context of the Caribbean, renewable energy is not just about climate mitigation, but it is first and foremost about economic development and reducing the price of energy, and also creating an energy system that is resilient to the effect of climate change. So I think that was a really good point, and sort of echoes what Matthew was sort of explaining to us, getting to a little bit more granularity into the type of technology we can use. And I think we're working together, Matthew, on a project in Barbados on green hydrogen that is still at the very early stage. But, this is really sort of the thing that can lead to a sustainable energy transition in the region. What advice would you give to the audience, to companies or to owners of capital to access blended finance resources? I mean, we know in the field that this is not an easy feat to access blended finance resource. So, perhaps tell us a little bit, what is your advice to access those resources? Matthew?
Thank you. I think to approach the subject, I think we kind of think about it in two ways. One is, I think it's important to note that when we think about blended finance, that IFC and the DFIs are not the only ones who are involved in this. I think Matteo kind of laid out the whole ecosystem earlier. Well, so it's important to know that accessing it through IFC and DFIs may have one view, but the private sector players can look across the whole ecosystem to see what may fit their specific needs best. I think the second is, when we think about definitions of what blended finance is, not to open up any conversations about it, but thinking about how we currently view it to make this more of like a practical approach. But just saying that, again, as Matteo highlighted earlier for IFC as well, blended finance is a co-investment product. It's not a standalone product. It's not intended to fill the role of technical assistance or feasibility or other upstream work with governments in order to help set up regulations or put out tenders or do anything else like that. It's more, once there's a project that's ready to be financed and where many of the other components are in a bankable place, but there's a market gap or some sort of investment barrier that needs to be overcome, then we can step in and help customize a solution with the investment team that help pushes the project forward. And so I think, reaching out to myself through the website, through contacts, through the local bank or through the local offices of the IFC, I think these are all good ways to just open up the door, working with the investment teams then to see if there's an investment that has the other components in place, and then we can help to think through the best structure to push it forward.
Thanks, Matthew. Gillian?
Great. I want to pick up where Matthew left off, because he said, once there is a bankable project. And I know that many people in the Caribbean, their hearts will sink having heard that. So I'll repeat it. Once there is a bankable project, because I know for sure that in the last 4.5 years, there have been many efforts to improve the bankability of projects. And so my advice would be for a pooled fund, and I think I said this in a call, because if the region had, through DBJ or through CDB, put $5 million and pooled funds in improving the bankability and the readiness of projects as viewed by investors, we would certainly have moved more dollars in the region. And that's where I come back to the issue of not being too rigid about what is blended finance, because the non-financial aspect of mobilizing capital means that had those dollars been invested, we would have had financial institutions and project sponsors who were then ready to approach Matthew and others with bankable projects. So I think that would certainly be my advice and part of my advice to the ecosystem, and to really congratulate Karaya and DBJ for what they've already been doing in terms of catalyzing and activating that kind of work.
Thanks, Gillian. I think it's a good point, on the readiness, and we can even push it forward. If you have a project that is ready and fully bankable, you don't need blended finance. And so I think really blended finance, it's to support near bankable projects. But, if the government's got it right, the tender has been designed the right way, project preparation has been there, really, you don't necessarily need blended finance. Blended finance comes in as later, it's almost like a fix. We have little time left, so I'm going to slightly tweak the last question, and maybe, in 30 seconds, tell us, how do you think we can scale blended finance in the Caribbean? What are your key recommendations? Gillian?
Finance is a relationship game.
Awesome.
Finance.
Gillian, I need to have more panels with you. You're the best panelist ever. Always spot on in terms of time. Matthew?
Oh, sorry, I was on mute there. Yeah, no, I think it's just important to remember that it's not a silver bullet. I think the blended finance is an important tool. I think that, there's challenges in finding the right amount of financing globally in order to meet this need. It's a big challenge that blended finance is going to face, and hopefully we can, find the right fits and get enough funds in order to help fill these gaps.
Thank you both. I hope the audience found it interesting. Thank you a lot for keeping up to time. We were able to go through all our questions. This is a rarity, so I really want to congratulate you for that. And before I leave the floor to Latoya, thank her for organizing such a wonderful event. Latoya, over to you.
Thank you so much, Matthew. I'm wondering if we could just take at least 2 questions. I know we're behind the schedule. I'm going to take the most recent one, which is, how is the current environment of higher interest rates impacting the concession in the blended finance structure, competition for capital, and long-run feasibility of the projects?
That's a good one. Who wants to take it?
Sure, I don't mind unless Dr. Marcel would like to go ahead.
I'll add.
Okay,
Matthew.
Yeah, we're definitely seeing a strong need where projects that previously did not need concessional finance, the new interest rate and inflation environments are starting to push projects into that gray area where they're just not quite bankable. So they used to be, but now they're not quite. And so we're seeing a large increase in demand for the amount of, in the demand for blended finance at the moment.
So let me add to that this is why I would caution against using the word subsidy, because I think that pricing is always dynamic, and interest rates a part of what you take into account when you're pricing any financial instrument. And so I would want to encourage us to have a wider and less inflexible definition of blended finance so that we can always have those pricing discussions with the sponsors and with the counterparties involved.
Thanks, Julian. I would slightly differ. I think you're right that pricing is dynamic, but then subsidy is equally dynamic. But we can have that conversation offline. Latoya, maybe you wanted to take another question? Right,
sure. Here I'm seeing, are there some sectors in the public space which, due to their sensitivity or because of their raison d'etre, is not profit making, but the provision of necessary public services, they are not ideal for a blended finance solution?
Okay, Gillian, you want to start with that? And I might chime in on that one because I have a pretty strong view.
Sure. And so, again, I come back to, I do not think that the mainstream definitions of blended finance from the IFC, Convergence, WEF, OECD are fit for purpose. I don't think that developing countries are particularly interested in typologies. I think that what they are interested in is in securing all forms of capital to meet those public service needs. And if we can have the wealthiest country in the world rediscovering industrial policy, because of course, the Inflation Reduction Act is blended finance on steroids. And so I would want to encourage us to only use definitions and anything that restricts our ability to mobilize finance, because I think the why and the how is more important than the nomenclature.
Matthew, do you mind if I take that one? Excellent.
Yes, please, go ahead.
25% of SDG spendings relate to investments. The remaining 75% are social transfers and public goods. You won't see blended finance there, and I think we have to be very clear about that. But we also have to be very clear that even though blended finance is limited to the investment, really what we're after is to what extent that investment is going to contribute to sustainable and economic growth. And this is not economic growth for the sake of economic growth, but economic growth ultimately increases the resources that are available to the state and allow to reduce public debt. And that in turn allows to fund the overall challenges of the SDGs. So really, when we think about blended finance and we think about mobilizing private capital, this is a mean to the end. At the end of the day, what we're really after is sustainable and inclusive growth. And let me emphasize the sustainable and inclusive. This is not just growth, but it has to be sustainable and inclusive. Latoya?
Thank you so very much, Matthew and Dr. Marcel. I believe we had a very productive session. I have quite a number of questions still that we have not been able to answer, but what I'll do is to capture this information and I'll ask the panelists to provide some feedback so that we'll have that available. So thank you again. I'm going to ask that the next segment starts immediately. Nicola, you may now take the floor.
Hi, good day, everyone. I'm Nicola Russell. I'm a manager in the PPP and Privatization Division at DBJ. Thank you, Matthew, and Gillian for a very interesting panel discussion. We're going to now discuss some investment opportunities that are being developed in Jamaica. I'll just share my screen. So today we'll be looking at the Government of Jamaica's PPP and Privatization Program, and then we'll move into some specific presentation on investment opportunities that are being developed by the Government of Jamaica. So I will be presenting, as well as George Nicholson, Transaction Director in the Ministry of Economic Growth and Job Creation, and Elva Williams-Richards, a Senior Vice President at the Port Authority of Jamaica. So some of the government of Jamaica's objectives for the PPP and privatization program. We want to facilitate private investments in the economy, broaden the ownership base and direct equity participation in the economy, improve efficiency in privatized operations, support the government's fiscal and debt management program, and monetize non-core assets, allowing the government to focus on core activities. In terms of the role of the Development Bank of Jamaica, we are the PPP and privatization agency. We have 4 functions. We have transaction management and project development. So we support ministries, departments, and agencies in developing their PPP and privatization transactions. We do program monitoring and evaluation, capacity building, and policy development. So we have PPP and privatization policies, and we have management of funding for project preparation. A little bit about the program in Jamaica. So the government's privatization and PPP policies, as I indicated, we have them, and they were published in October 2012, updated in 2017, and the PPP policy was further updated in March 2023 to include mostly climate resiliency considerations in the development of PPP projects. To date, we have completed 7 PPP transactions. These are the Norman Manley International Airport, Sangster International Airport, Kingston Container Terminal, the North-South Highway, Highway 2000, School Solar Energy and Efficiency Project, and Rio Cobra Water Treatment Plant. We've completed 31 privatizations since 2009 to date. They're in several sectors: energy, mining, tourism, agriculture, transport, real estate, or housing. Currently, we have about 33 transactions in the pipeline, about 14 PPPs and 19 privatizations, mobilizing over US $2 billion in investments in the Jamaican economy. So just a snapshot of some of the transactions that have been completed. So we had the privatization of Wigton Wind Farm. That was via the Jamaica Stock Exchange. So 100% of the shares in that company were privatized by the stock exchange. We sold hotels like Jamaica Pegasus. As I indicated before, we did the Kingston Container Terminal and the Norman Manley International Airport PPP transactions, and we privatized the Caymanas Track. So projects in the pipeline, I'll just speak to a few and then I will hand over to George. So the first one I'm going to talk about is the National Water Commission Soapberry Wastewater Treatment Plant expansion and PPP. So NWC, National Water Commission, is seeking to expand the wastewater treatment capacity in the greater Kingston metropolitan area via expanding the capacity of the Soapberry Wastewater Treatment Plant. They want to do this in order to increase population access and sewage service coverage as per the projected incremental increase in demand. So the original plant was constructed in 2007, treatment capacity of 75,000 meter cube per day. CWTC owns and operates the Soapberry Wastewater Treatment Plant, and NWC has an 85% shareholding in CWTC. So currently we're doing the business case and transaction structuring. So we have our advisors on board and we're completing that. So the investment value is estimated at about 85 million US, but this is subject to the results of the business case, which we're undertaking now. We have the Integrated Solid Waste Management Project. We want to implement an integrated solid waste management system for the island, separate the regulatory and operational functions of solid waste management. We want to have private sector participation in that project, and we want to relocate and rehabilitate the Riverton City landfill facility. So the current status is we've already completed from 2002, the waste characterization study, the siting study, the Riverton closure plan. We're in the process of completing the business case and transaction structure and the institutional strengthening of the National Solid Waste Management Authority. So we're still working on the business case, so the investment value is still to be determined. In terms of the Ministry of Justice, they're actually contemplating PPPs for the development of new regional judicial court complexes in 3 of our parishes, that's Manchester, St. Anne, and St. Catherine. So the procurement of the transaction advisors to assist the government to look at the business cases underway, and we expect that the business case for the Manchester one will be completed in this financial year. So the estimated value is subject to, the business case assessments for Mandeville, it would be between 25 to 30 million US, and for St. Anne and St. Catherine bundled together would be between 50 and 60 million. So I'm just going to hand over to George Nicholson now, Transaction Director in the Ministry of Economic Growth and Job Creation, to take it from here.
Thank you, Nicola. And of course, thanks to the DBJ and CARIA for the invitation to present here. I'll just be going very quickly through the work that's being done with the Ministry of Economic Growth in terms of our highway projects, specifically the North Coast Highway and the Discovery Bay Bypass, both of which are contemplated at this moment to be PPPs. So just by way of background, we have a few issues out on the corridor with respect to travel time. A trip that should be taking us about 15 to 20 minutes generally takes about 3 hours during the peak periods. Of course, there's a high vehicle operating cost and the other related environmental impacts that are associated with this excessive travel time. Further to compound what we have is that we have a lot of investment that is coming up in residential housing, in the leisure market, in terms of new hotels, commercial developments, and the sort of infrastructure required to support that. It means that we anticipate that there's going to be a significant increase in the traffic volumes on those corridors, well, on the North Coast Highway, I should say, in the coming years. We had done, next slide, please, Nicole. We had done an upgrade on the same highway about 20 years ago, anticipating what our 2020 demand is. And for those who can see the slide, we expected 2020 demand in the vicinity of 19,007 and 9,000 for some segments. And as you can see from the figures in the red, we're significantly above that now at 2023. So the challenge here now is to actually improve the capacity and the performance on the corridor. We've done this sort of exercise before in a different segment, and we're now carrying it all the way from Montego Bay, where it has stopped, to Ocho Rios, to Miami Bay. Next slide. So this is just a schematic of the project. We'll be starting in the west, in Sea Castles, just outside of Montego Bay, that's segment 1, and then moving towards Discovery Bay in segment 2, and what we consider is one of our critical areas, the Miami Bay to Salem, as segment 3. And the other project, it's a standalone project as by way of how we're doing our analysis now, is the Runaway Bay to Discovery Bay Bypass. Next. So just our general project criteria, we want to ensure that we can maintain highway speeds of 80 kilometers per hour, of course, enhance safety on the corridor because it's a high crash zone, the entire corridor itself. Of course, we want to reduce the delays on the corridor itself and provide facilities for the large developments by way of service roads. And in the hinterland, we're looking to improve access to the towns onto the highway and east-west on the corridor, and provide for our design levels at the very, very end a minimum level of service for the engineers here of level of service D. So that's our general criteria. This is just, again, a schematic of what we expect the road to look like afterwards. We want to ensure that we have a median in the middle, a green median in the, excuse me, a green median in the middle as opposed to concrete barriers, but that's basically where it can be fit. And we want to have an unrestricted access across the highway in some areas, but we're widening from 2 lanes currently to 4 lanes. Just looking at some forecasts, we realize that with a 2% growth per annum, that's GDP. When we've looked at our numbers, we realize that generally speaking, our GDP tracks traffic growth pretty well. So at 2%, 2.5% growth per annum should get us where we need to be in 2050. So we realize that we have appropriate capacity on the corridor on all segments up to 2050. After 2050, we'll figure something else out. Next slide. Next.
Coming, George.
So I'll just continue in the meantime. So this would have been our original estimates. What we're expecting here in terms of the sort of spend here is the two projects together are going to run us maybe in the region of about 750 to $1 billion. So, you know, I did note some comments before about the size of the investment and how we can attract what we're trying to attract. So what we're expecting here, having looked on those numbers, is that we have a strong business case. Our slides are still stuck. Yes, we have a fairly strong business case looking at converting a pretty strong business case in terms of upgrading that corridor. For a 20-year concession, of course, is going to meet the sorts of technical requirements of the government of Jamaica, which of course is the important thing. We expect, because of issues regarding the current legislation via our Toll Roads Act, that we're going to be doing this project by availability payments as opposed to user pays. Just a thing for persons who don't understand the Jamaican environment. Our act requires that if we are going to provide a toll corridor, we have to have a free access, a free highway running simultaneously. In this particular case, we don't have that freedom. So we're going to have the government of Jamaica provide availability payments to support the project, which is in a sense embarking on new territory for us. Now, just looking at what was called segment 4, the Discovery Bay to Discovery Bay, Runaway Bay bypass, again, it's one of the areas that we have a lot of congestion, but a lot of, if you can look on your screen now, there's a lot of hotel development in the area between Salem and Runaway Bay, and of course, in the town of Discovery Bay itself. So our intention here is to provide access for this in the southern part. So the town of Brownstown and the smaller towns around it, Dumbarton, Philadelphia, Sturgestown, etc., and give those persons the ability to bypass the more congested areas of Runaway Bay and Discovery Bay. For this corridor that is being proposed, we expect to have a high-speed corridor with 4 lanes, maybe a 12-minute travel time instead of the current 30 minutes that it takes you to travel through the town now. Expecting to capture about 40% of the current vehicles running through the town of Runaway Bay and Discovery Bay. Our expectation is that we're going to package it as a DFBOM, and we may join it along with the Brownfield project that's being done. And we are proposing that it will be a user pay concession with no financial obligations from the GOJ. We're in the middle of doing those studies now, the feasibility study, looking at pretty much the routes, the preliminary design, willingness to pay, tolling strategy, etc. And what we'll probably do is package it together with the Brownfield project, which is the North Coast Highway itself, to ensure that we can benefit from the efficiencies of joining those two things together. Looking at the fact that investors may be looking for, larger rather than smaller investments going forward. So by way of progress, next slide, Nicola. We have done for the Brownfield section, that's the North Coast Highway itself, we have done what we call our phase 0 or preliminary assessment, which gave us approval to move the project to the next phase. Phase 1, we're now looking at structuring. So currently we're doing due diligence, we're working tightly with the IFC, doing due diligence, technical, financial, and legal, as well as environmental, and then now looking at defining the project structure. And we expect that at the end of the year or the start of 2024, we'll move into our implementation phase, which is phase 2. And of course, that is subject to the outputs of phase 1 and the appetite for the government of Jamaica to stand the cost that we're going to be proposing. And that phase 2 will look at our marketing and so forth. So this is just a final schematic, just indicating where we are on timelines. We are in phase 1, which is ongoing now, which is looking at defining that transaction structure and then advising the GOJ on whether or not they should procure the project. 2024, for the whole of 2024, we expect to be doing our execution, marketing the project, doing the contract drafting, tendering, and final evaluation towards commercial close. And then in the following year, we expect to have that successful bidder do financial closing, and we have a highway ready to build. Thank you. I think that's all of my presentation today. I now turn over to Ms. Elva Williams-Richards.
Thank you very much, and good morning, everyone. Just before I get into the presentation, it would be wrong of me not to say thanks to DBJ for the invitation to join this forum with a group of knowledge-based professionals. I am most encouraged by the foresightedness of the group to establish a career, and I look forward to learning more as we go through and possibly to be a participant in sourcing financing through this medium. I just give a very brief outline of PAJ for those persons who are online or who may not know about Port Authority of Jamaica. Port Authority of Jamaica is a public body, self-financing public body, has responsibility for regulatory and development of Jamaica maritime space, and that includes the cargo and cruise ports. We have 18 private ports in Jamaica, 3 public ports, and we have 6 cruise ports. PAJ is a significant investment, has significant investment in real estate and providing space in specific industries that the government deemed as growth sector and which will bring economic growth and job creation, and that is a logistics and business process outsourcing. We provide space for in those industries. We invest significantly in port infrastructure, which are long-term infrastructure and often requires very, very significant outlay in cash. So that's it. And I'll present you with some of the projects that we're doing or we have in the pipeline. These are just some of them. I selected the ones that are high priority for us. So the main one is we have a development planning for a 50-acre development for Falmouth Town. And the Falmouth is where we have our last cruise ship, have the cruise ship port in Falmouth, which sits in the center of the town. It's was built in 2008, costing over $126 million US, and it was an investment with private participation from Royal Cruise Line. It's one of our most active ports currently, and the 50 acres is right adjacent to the port and the town. And so the idea is government has mandated us to look at it, develop, put in some infrastructure comprising of commercial complex, civic center, common area, and of course there's a famous new drag line that we have to fix in there, which has been a problem for a couple of years. This is a project that requires participation of public and private sector, and the municipalities in Falmouth is very important to the success of this project. Where are we with this? We have gone to, we're doing construction documentation and due diligence, and we're working to have the financial analysis completed in short order. We're at the stage now where we're going through the government procurement process to get some of these works undertaken. Okay. Next slide, please. Montego Bay project, which is a 12-acre commercial mixed-use project that we have on the radar as well. And it includes building out, it's what we call a twin tower. Montego Bay has been, over the recent years, have had significant increase in traffic from both people moving closer into the town and so on, and lots of development has been taking place there. The issue as we see it, based on, we have significant acreage in Montego Bay, which is, we have the port, one of our ports in there, the Montego Bay port, both cruise and cargo port. And the idea is to build out some commercial spaces that will enhance the use of the port with, we have logistics and we have warehousing. And this, again, this project is, we just got cabinet approved to award the contract, the consultant to contract to commence the design and complete the construction documentation. We're anticipating that this is a 24-25 project and a build out of possibly about 2 to 3 years. In terms of the financial consideration, we're still working on that with the consultant to complete that process. So that's where we are with that project. Next slide, please. This is just another view of the 12-acre. Again, this is just saying some of the things, the warehousing, open plan offices, commercial, entry plaza, and so on that will be there. And parking, of course, will be provided. The truth about Montego Bay as well, which is important to note, is that a lot of the buildings, certainly from Port Authority's investment in this space, they're over 40 years, and it's time for us to refresh and provide new buildings that are more aligned with eco-friendly and the ESG requirements that are now climate resilience and all the things that we have to look at. So we're very excited. Well, I'm very excited about this particular project. We will give a new facelift to the space in Montego Bay, and it will enhance our port operations as well. Next slide, please, Nkelen. The Port Antonio East Harbour Development Project, we have been mandated or asked to develop, look into. Portland is one of our, I would say, a premier destination in Jamaica. It is the statistics that we have here. We have annual visit of over 2.5 million persons, and within the space, it's eco-friendly, it's a green space. And the government wants us to look at how we can develop and integrate and create growth within the space. We have a fair amount of land, and we have started a process of looking at this project. Consultants have been engaged. In addition to a cruise ship port, we want to develop some other commercial and facilities for the town people within this space. And the government is fairly strong and developing green space and that allows the population within the space that we develop these cruise ports to benefit economically, as well as making it a space where they can enjoy, and it's not exclusively for cruise tourism. We have engaged a team of local and international architects by way of consulting through government procurement process to look at the design and what can be done with this space. And this is just a snapshot of where the area within which the cruise port will be developed. And the development strategy for this space will address climate change, and especially in relation to things like sea level rise in ports. Port Antonio is specifically a very delicate space, so we have to ensure we do all the things that are necessary to maintain the ecosystem that is there and not do damage to the environment within this space. Is there a next slide? This is just a very nice picture of what Port Antonio look like, an aerial view of Port Antonio. The development is within the East Harbour. And where we are now, we're working with other government agency in the mapping of where the lands are, the ownership of the land. We're working with national NLA to identify spaces that are owned by government, spaces that are also owned by the private sector. This, if it is completed, should be game changer for Port Antonio. We have Navy Island, which is across, which is a 60-acre property, and that too is an area that we're looking at as to how we can develop that space for housing or some tourist attraction in this space. So we have a fair amount of work ahead of us to have this done. And I think that's the last slide, Nicola.
Yes, Elva, that's it.
Yes.
So, yeah.
Thank you very much. Thank you.
Thank you, Elva and George. Those presentations were very informative, and I think persons have now an opportunity to see what the government of Jamaica is developing in terms of infrastructure over the next few years. Unfortunately, we don't have any time for any Q&A right now, so I'll just hand over straight to Mrs. Denise Arana, the General Manager in the PPP and Privatization Division at DBJ, for the closing remarks.
Thank you, Nicola. Just to say it also that we can deal with any questions that have been posted. We'll circulate any responses on that. So I'm given this really incredible task of closing off this session. I don't know how I can do it in just 5 minutes. There's been so much unpacked and discussed in this session. So I am the General Manager for PPPs and Privatization at the DBJ. And I have to share with you that when I sat in the preliminary kind of test runs, of the discussions, and I saw the depth of the expertise and the passion and energy of the participants, I knew that we would have an excellent presentation, right? And I was right. Congratulations definitely to Karaya and the DBJ team, and kudos to our hardworking, and I know Mrs. Sharon Craig is here. She was instrumental in actually getting all of this executed. So the panelists and presenters were able to take a very kind of practical approach to explaining the concept of blended finance. We know that there are a range of possible kind of definitions, but they also clearly articulated the significance and importance of blended finance to us getting to sustainable and, as Matthew said, inclusive growth in the Caribbean and, developing economies. I think more importantly, the audience would have heard from you, Matthew, how to unlock and access this development financing. You spoke about the different criteria. I also heard and appreciated very much as a government PPP practitioner, the terms de-risking, concessionality, subsidy, or as Gillian says, dynamic pricing, let's not call it subsidies, and the sustainability, and also the range of financing instruments that can be used. And I know that Nicole, Peter Patterson, I saw your question on, how blended finance, kind of relates to gender lens investing. And that's another very, big topic that we have to explore and discuss. I really also appreciated that Matthew said that blended financing can provide customized solutions that are transaction and context specific, because certainly from our point of view in Jamaica, that has been a significant issue for us, right? We have specific needs, we have specific objectives, we have a specific economic context, and that has to be taken into consideration when we're looking at these blended finance options. We also understood a lot better, thanks to the panel, the role that blended finance plays in catalyzing private finance, and the fact that it really is a temporary mechanism and anticipates an exit on refinancing as the project becomes more mature with established business viability. Interesting for us as well, I made a note of it, was that the role, Gillian, you made this point, that the role of national development banks are important. That's why DBJ is here, right? We can play a role in coordinating and deploying blended finance. And certainly we know, Gillian, the issue of creating project preparation funds to help with the upstream work that we have to do in developing all of these infrastructure projects. And I'm just hinting here that the DBJ has taken note of that, and we are working on establishing something like that, a project preparation facility with the help of multilateral finance. So, you know, that's exactly what we're talking about here. Lastly, I heard about the significant need to mobilize and deploy more capital within the Caribbean, and that we really need to help to reduce that financing gap that exists. And Gillian, you spoke about scaling through relationships and relationship building. So what's the bottom line? What's the takeaway from all of the discussion from me? Blended finance, however you choose to define the scope of the support, is a key financing mechanism that can facilitate the delivery of more innovative, sustainable, climate resilient infrastructure. And I don't think we can overemphasize, certainly within our context, the fact that it makes the project more affordable, right, for Jamaicans and citizens of the Caribbean. We know the link between infrastructure and sustainable and inclusive growth and development, but the why of us doing all of this, the why we are here as professionals, as financiers, it really is so that we can develop sustainable infrastructure and very efficient public services that will improve the lives of Caribbean citizens. That's the bottom line. All of this that we're talking about, it's about improving the lives of Caribbean citizens, and which is the ultimate goal of government. So thank you so much to our keynote speaker, Matthew, and panelists Gillian and Matthew. What a stimulating conversation that was. I'm seeing all of the comments, like really great thoughts, and the fact that it was almost like a debate, very stimulating. Thank you. To our hardworking GOJ officials and practitioners who we live and breathe project development and infrastructure development every single day. Job well done in highlighting some of the opportunities that we are developing. It's important for not only the public, but investors to know that we are taking this role very seriously. We have delivered infrastructure projects, so we are also building the capacity to do that very well with support from multilaterals. And the fact is, blended finance needs a home. And without well-prepared, viable and bankable projects, it will just remain a concept. And so we have to work together to get this done. And Gillian spoke of aggressive marketing, which sometimes is absent from the work we do, and we're taking that on board. So finally, thanks to all of you for participating. And we know that you certainly were engaged and excited. We are excited to explore the opportunities that you've heard about today. We're asking that you complete the assessment form that has been posted in the chat. I know that there will be more from Karaya, and certainly the DBJ is open to any discussion that you want and any more information that you want on any of the projects that have been presented. We think outside of the box, we're not just focusing on the projects that DBJ are developing, but throughout the Caribbean. Throughout, the government, our partners like PAJ and the Ministry of Economic Growth and Job Creation. We have published a booklet, which we will circulate after this. So thanks again. Have a wonderful, wonderful day. Keep checking the DBJ and Karaya websites for any updates, and we look forward to further engagement. So have a great day, everyone.